Hello, everybody. This is Patrick MontesDeOca, CEO of the Equity Management Academy. As on this segment, what I would like to do is share with you the report that we just published in the Associated Press, entitled "Gold: The Widening Wealth Gap in America is the Biggest Bull Trap in History." Summary: the stimulus bill in Congress is being politicized while Main Street continues to suffer. The market hit a high of 1973.30, and then gold began to experience a series of positive news regarding vaccines and their efficacy. We now seen a 50% retracement from that high. The stimulus bill in Congress is being politicized while Main Street continues to suffer. Fundamentals. The pandemic hit at a time when the economy already was weak and broken. Egon von Greyerz, in an interview with King World News, said that we are approaching the end of an economic era in the world. Anything that can go wrong, he said, will. The pandemic appears to fit that analysis. The current economic system was laden with debt, which was almost impossible to maintain. COVID-19 created an explosive situation in terms of the financial system. The system appears to be about to fall apart. We're going to see increasing volatility in major businesses, such as leisure travel, airlines, and other areas. Many big businesses are going out of business, and thousands of small businesses are gone. Unemployment remains high, and many people are not going to get their old jobs back. A depression seems likely. Von Greyerz identified the immense wealth disparities in the system. Billionaire wealth increased 70% in the past 3 years. At the top of the global wealth pyramid, we see the biggest wealth trap in history. Von Greyerz counts 2,200 billionaires in the world, and in the past 3 years, their wealth has increased from 4.2 trillion to 10.2 trillion. Most of this wealth is in U.S. denominated assets. Stimulus plans appear to be implemented for the long term as we face the risk of a depression that may be worse than the 1930s. The current new lockdowns are halting an economic recovery that was just beginning. The COVID-19 spike from Thanksgiving has not hit yet, and we are facing another holiday, Christmas, which will lead to even more cases. The retail economy has collapsed. Small restaurants and businesses are losing. Some are closing. Some businesses will not accept coins or currency, relying only on credit cards for health reasons. We appear to be moving out of the physical economy into a virtual economy. The collapse in March separated the old and new virtual economy. Billionaires are promoting the policy that we move even further into a debt economy, based on printing more stimulus. But such arguments are running out of steam. They are made by the same elite who in 1971 took the US dollar off the gold standard and started the current debt-laden system. These are the same people who risk losing 90% of their wealth if the US dollar collapses in the next few years. Greyerz sees us moving into a world economy that fuels global debt, which in turn fuels global wealth. Total global financial wealth is up almost 3 times, from 80 trillion to 225 trillion from 1980 to 2020. But the key is that wealth is in US dollar denominated assets. This currency is moving into an inflationary spiral, which is caused by printing money in the form of stimulus to prevent an economic collapse. During this time, global debt went from 80 trillion in 1990 to 277 trillion today. Global debt has gone up 246%, while global financial wealth has gone up 181%. Such factors do not bode well for the U.S. dollar long-term value and purchasing power, as well as the value of all assets valued in U.S. dollars. We appear to be coming to an end of the current economic system, which is primarily creating an elite group of people who benefit from the work of 90% of the population. The stock market appears to be moving into a major bull trap. Big and small investors believe that they have solid wealth in terms of U.S. dollar-backed assets, but it is clear that the U.S. dollar is going to be ambushed by this seemingly invisible enemy, inflation. It appears that we are looking at a total debasement of fiat currencies because world debt is unsustainable. Some countries are running debt levels versus GDP of 120% or 130%. We only stay afloat because interest rates are near zero. The only thing that has maintained its purchasing power for thousands of years is gold. Prepare for tremendous volatility over the next few months and years as we see unlimited amounts of stimulus come into the economy. As currencies collapse, we will see inflation and possibly hyperinflation, which will temporarily boost assets in nominal but not real terms. That will then lead to the implosion of asset bubble in stocks, bonds, and real estate. Gold and silver appear to be safe havens from such inflation and collapse, just as they have been for thousands of years. Let's take a look at the 360-day cyclical targets. Since our September 28, 2020 report for supply and demand for the 2020-21 period, we can see that the market, after the report was published, reached a high around 1961. The high was reached based on the fact that the government officials announced that they planned a major stimulus package. Gold then moved into a choppy period during the election period in late October and early November. The market hit a high of 1973.30, and then gold began to experience a series of positive news regarding vaccines and their efficacy. It looks like 2 or 3 are entering the market, and that caused sellers to take profits at these levels, which increased supply. The level of supply was far beyond the level of annual productions based on the Commitment of Traders report. The central banks had a massive short position equal to approximately $38 billion. The 1913 level to the variable changing price momentum indicator was the beginning of the distribution of supply or sellers starting to come into the market. At these levels, there is a high probability of sellers coming into the market regardless of the fundamental news, such as the vaccines news, which brought gold prices down to a 50% Fibonacci retracement. It coincided with the 360-day average of 1810 and the monthly average of 1840. It completed what appeared to be a perfect Fibonacci retracement. Gold appears to be in a counter-trend correction since the March lows. Central bankers and economic leaders are politicizing how much stimulus should come into the market. The market hit a high of 1973.30, and then gold began to experience a series of positive news regarding vaccines and their efficacy. It looks like supply is entering into the market, and that caused sellers to take profits at these levels, which increased supply. The levels of supply was far beyond the levels of annual production. Central bankers and economic leaders are politicizing how much stimulus should come into the market. The high of 2099 with a rally from 1461 was in anticipation of severe damage to the world economy. After reaching 2099, the market discounted that information and waited to see the actual facts or casualties of the pandemic. It then reverted back down to test the buying power of the market. We have now seen a 50% retracement from the high. The fact that the market moved right back up, it means that the new targets are 1913 to 2045. On a short-term basis, the Biden administration has clearly won the election, so there's now talk about how much stimulus is going to come into the market, which is affecting the market. The stimulus bill in Congress is being politicized while Main Street continues to suffer. There's a light at the end of the tunnel in the form of vaccines, probably in about 6 months. Short term, we have to consider the effects of lockdowns as the virus reaches record levels of infections and deaths. We are going to be dealing with a lot of volatility as we come into the end of the month and year-end profit taking. Any chance that the market tests 1830 to 1810 or even down to a 61% retracement at the 1703 level, it would be an extremely high probability of a reversion unfolding from those levels. The 9-year cycle says that 1675 offers tremendous support. Right under 1707 are a slew of indicators that suggests there will be strong support down in that area, and it would be an excellent place to get into the market on the long side. We strongly suggest using these corrections, which could be 2020 annual lows, to add to your long-term bullish gold position.